Hello and welcome to my premium bonds and Hargreaves Lansdown stocks and shares ISA portfolio update for June. In this video we'll be looking back how my portfolio has performed over the last month, and at the end of the video we'll also see if I won anything in June's premium bond draw. Before we get into that though, let's take a look at what shaped the markets in May and see what impact those events had on my portfolio. May carried on the ongoing trend we've seen for most of the year, which is a lot of tentative steps being made with a lot of past events like bank failures sticking firmly in the minds of a lot of investors. Where a lot of sectors saw declines in May, tech stocks had a good month, helped with the advance of artificial intelligence. And who could blame people? After the last few years, I'm quite looking forward to having what remains of my skull crushed under the foot of a crazed AI-driven cyborg. 2023's Q1 results brought some surprises, with the UK economy growing by 0.1% in Q1, easing fears that it may slip into recession later in the year. Hopes that Germany would avoid a recession were quashed after it saw another consecutive period of economic decline for Q1. With inflation easing slightly, but another base rate rise by the Bank of England and a housing market that's finally starting to cool off, there are still plenty of hurdles ahead for the UK economy. Emerging markets saw another poor month on the whole. A drop in oil prices was a factor, but also political instability in some countries hit the markets pretty hard. South Africa saw the rand hit its lowest point compared to the US dollar after allegations that it was supplying Russia with weapons, a move which surprisingly hasn't gone down well with the most of the world. Now that cheery introduction is out the way, let's start taking a look at how my portfolio has fared over the last month. I'll start with income. Unfortunately it's still minimal, but just like buses, I've got loads of dividends due to pay out in June. At the start of the year I was hoping to beat £10 a month on average through dividend income, which I'm hoping I'll beat. Be sure to check out July's update video to see what impact the dividends I received in June made on that. So in May I received no dividend income and a pretty poor 38p in novelty bonus. I'm really looking forward to that income chart finally seeing a bit more blue this coming month. That column from February needs some friends, preferably some very tall ones. Moving on to my portfolio on the whole, we can see how the problems mentioned earlier have hit my holdings. I started picking more individual shares rather than funds for my most recent purchases, and I'm still happy with those. Centrica and Rolls-Royce have both seen decent rises in value. Unfortunately, as I only bought into them tentatively, I've not seen a huge return on those investments yet. Rolls-Royce have been in the news a lot again recently. I'm thinking of making another video on them soon. I've already made a couple, but they're a company that's constantly evolving and tackling new issues and, unfortunately, some old ones, so there always seems to be something new to address there. One thing I'm thinking is I'm already over 40% up at the moment. Is now the time to sell and take a punt on something new and risky, or is it best to hold on for the long run? As an investor, I buy for the long run. I think buying, just hoping for a quick increase in return, is closer to gambling than investing. I'd rather pick into companies that I think are solid and can hopefully maintain growth and a source of income for me in the future. I still love Rolls-Royce, although I won't be buying any more for the near future, I wouldn't have thought. One of my picks that has bombed since buying it though is Legal & General. If you look at the buying stats down the bottom, it's pretty much the definition of catching a falling knife. With every purchase the price has dropped further. I do think Elgin are massively undervalued at the moment though, and have been hit hard by investors' fears. The plus side to the share price having dropped quite low is that with this being one of my biggest holdings, I'm due a fairly substantial dividend from them, and with the share price being a bargain at the moment, I'll be buying up a decent chunk with the automatic reinvestment of my dividends, and thanks to Hargreaves Lansdown scrapping their dividend reinvestment charges, I'll be saving money there too. One fund that has finally seen growth is my S&P 500 holding. The S&P 500 has seen a fairly slow but steady recovery since it took a big hit in March, where we saw some pretty big banking institutions collapse. As the fears ease around the financial system, the US markets have slowly gained ground, but there are still recession fears and a lot of other headwinds that have stunted its growth. That easing of fears has also led to my Artemis Income Fund seeing some decent growth again of late. This fund has some large stakes in investment and banking sectors. Although it's only dipped its toe into the US market, the ripples from their banking sector troubles were felt far and wide. I'll run through my remaining funds briefly now. Feel free to pause if you want a proper look at them before we take a look and see how I got on with June's premium bond prize draw. I've had some pretty bad luck of late, but with interest rates rising, I'm seriously wondering if these savings are in the best place or not. Let's see if June can put my worries to bed though. Nope, it's pretty much made them a warm cup of cocoa and plumped up his pillow. That's it for today. Don't forget to leave a like and subscribe for future content, all that good stuff. Stay safe out there. Peace.